It doesn't take too much brain to figure out that Ethereum is comparatively cheap right now. Comparatively to Bitcoin or to Solana, Ethereum went down a lot. Now the question is, just because something is cheap doesn't make it a good investment. Let's have a look at some data most people are not considering. Let's try to figure out if it really makes sense to buy Ethereum now. Because here's the chart everybody is looking at. It's the Ethereum dominance, or how much of the entire cryptocurrency market cap is currently in ETH. And this tends to trade between 7% of all of crypto being ETH and 20% of all of crypto being ETH. It seems like in the last few days we have bounced at the support line, which was formed in September of 2019. Ethereum seems to have stabilized. Now, does that mean that Ethereum is a good buying opportunity now? Within the decentralized finance world, Ethereum is still very much relevant. 51% of all of total value locked across all blockchains is still in Ethereum. And yes, the overall trend isn't that great. 1 year ago, 61% of DeFi was ETH. But still, when we compare Ethereum to its biggest competitor, Solana, we do see a potential opportunity. Check this out. This is the total value locked of Ethereum in blue and of Solana in green. Of course, Ethereum is much larger than Solana, but let's have a look at the ratio. So Solana has 8 billion of total value locked, Ethereum 51 billion. So it's roughly 6.5 times more capital. The market cap of Ethereum is 217 billion. The market cap of Solana is 75 billion. So in terms of market cap, Ethereum is only 3 times as large as Solana, but it has more than 6 times the capital. And the trend is also quite clear. It hasn't always been the case. So this is now Ethereum's market cap relative to Solana's market cap. It's currently at a factor of 3. And just 2 years ago, the factor was 26. Now, when we buy an asset that's very cheap, where everybody has already given up on the asset, the central question always is, will this thing stay around? If we buy a business that's going to get replaced with something more modern, it doesn't make sense to buy cheap. But if the thing that we are buying has just a temporary drawdown, we might get an opportunity. And so that's the big question. Will Ethereum stick around, or will it get replaced by Solana, for example? My impression is that Ethereum is here to stay. Even though the short-term speculative money, like say for Memecoin trading, might have moved to somewhere else, there's still a strong use case for Ethereum as being the safest of the blockchain. One of those use cases is stablecoins and real-world assets. So this is the overall stablecoin market cap over time. This was the collapse of Terra Luna. This started the bear market. Since October of 2023, crypto is expanding again. There's more and more stablecoins, and currently all stablecoins across all chains is at 242 billion. Of those 242 billion, 126 billion are on Ethereum alone. Some of it is Tether, some of it is USDC, but as a fraction of all of stablecoins across all blockchains, Ethereum is still playing a major role. And I've got my doubts that all of the assets that are on Tron are actually one-to-one backed. But I've made videos on this in the past. For example, the Bitcoin tokens that are on Tron, they are not necessarily 100% backed. Because Justin Sun, the founder of Tron, he never pointed towards the Bitcoin addresses on the Bitcoin chain that correspond to the tokens on Tron. There might be something similar going on for Tether. And so really the Ethereum market share across stablecoins is probably much larger. A lot of the stablecoins on those other chains are also just bridged over from Ethereum. So the actual redemption from the blockchain to the fiat ecosystem only happens directly via ETH. ETH is a central bridging point from traditional finance to crypto and from crypto to traditional finance. But then the big question is, why did Ethereum actually underperform that much in the last months? One explanation is the Ethereum ETF, or the Grayscale Ethereum Trust. Because with the conversion from a trust to an ETF, the outflows from Grayscale got unlocked. And that's then what we saw in the net flows of Ethereum. We tended to see more and more ETH tokens hitting the market. But this has recently stopped. It seems like now we finally see some inflows in the Ethereum ETF. This is the number of Ethereum that are locked in the ETFs. And again, we see the outflows from Grayscale, but now the net balance is finally ticking up again. We don't necessarily see constant outflows anymore. Another great worry was the staking program. So over time, Ethereum gets staked because Ethereum moved from proof of work to proof of stake. And even before that merge, we already saw initial staking happening. Now that staking has plateaued. And a few weeks ago, people still thought maybe we now see continued unstaking. So when the Ethereum gets unstaked, it might get sold off. But that seems to have not materialized. We're simply just plateauing. We don't see real outflows. The Ethereum that's now staked is probably going to stay at this level. We're not going to see selling pressure from the staking. At least the current momentum doesn't imply that. There's also no central point of failure with the Ethereum staking program. Ethereum staking happens across various protocols. Even if one of those protocols fails, even if one of them gets hacked, overall the staking program should stay healthy. There's no clear monopoly in staking. It's split up across various entities. We don't see outflows, we don't see inflows. We are simply just seeing equilibrium in staking. So we know that Ethereum is getting used as a bridge from traditional finance to crypto. We also know that the staking program is somewhat healthy, that we don't see any selling pressure coming from that. But is the chain actually used for transactions? The answer is yes. Even though the gas fees, the transaction fees, aren't the lowest across chains. So this is the Ethereum decentralized exchange trading volume over time compared to other blockchains. And it's still quite large. It's not 50% as the total value locked in DeFi, but given the comparatively high fees, in US dollars at least, there's still significant usage. Measured just in plain old Gwei, so not in US dollars, the transaction fees actually went down quite a lot. Especially now with the increased competition, doing single swaps on Ethereum doesn't cost $100 anymore. It's just a few cents, at least during non-peak hours. So you want to avoid the time at 2 p.m. UTC. This is where Ethereum gas prices tend to spike. It's not like there's a ton of new innovation happening on Ethereum. It's not like there are so many new smart contracts getting deployed on ETH. Ethereum is simply just operating on the stack and on the applications it has developed months, potentially years ago. This is the number of new ERC20 tokens on ETH, so the newly launched assets. And of course, this went up massively for Solana with Pump.fun. We don't see that much manipulation on Ethereum. The number of active Ethereum addresses stays high. It's not growing that much anymore in the last 3 to 4 years, but at least it's also not contracting. It's just steady at its level. And when it's steady at this level, then does it really make sense to see this Ethereum crash? That it underperformed the rest of crypto by 60% in the last year. There's a similar thinking for Bitcoin, right? Bitcoin is the best purchase whenever it has already crashed by 60, 70, 80%. That's when we want to buy. We want to buy when everybody calls Bitcoin a scam, when everybody thinks that Bitcoin and crypto will get outlawed, that it will go away. That's when we want to buy. We also want to buy when most people give up. We want to buy when most people are in losses. So when the average cost basis of the market is above the current price. So here's the chart for Bitcoin. We want to buy whenever the price is below the average cost basis. This was historically the best time. And unfortunately for Bitcoin, we are quite far away from that average cost basis, which is currently at 44,600. However, for Ethereum, that's different. Ethereum is already below its realized price. The average Ethereum investor is now in losses. Buying Ethereum now corresponds to buying Bitcoin at 44K. Relatively speaking, Ethereum is obviously cheap, and the only question is, will it stick around? And if the answer to this is yes, if you believe that Ethereum might launch an S&P 500 ETF, if you believe that there might be a property index traded on Ethereum, if you believe that Wall Street over time will move more and more of its assets to the crypto world using Ethereum, and this chart is likely going to go up as well. This is, I believe, the main bull case for ETH. It's going to be adoption by TradFi, by Wall Street, because Wall Street probably does not necessarily want to launch its assets on Solana. Solana is for meme coin trading. It's for short-term speculation. Now, in October of 2023, the market flipped. The market turned from bear to bull. The market saw inflows from traditional finance. And we can see this in this chart. This is the stablecoin market cap. So it shows how many dollars in the fiat system are deposited somewhere with a custodian, say with Tether or with Circle, and what equivalent has been minted as stablecoins on chain. And from May of 2022 to October of 2023, we actually saw a contraction of the market. So money was flowing out of crypto. People were turning back to TradFi. People were withdrawing their money. But that then changed in October of 2023. Since then, we see more people depositing than withdrawing from the crypto ecosystem. And surprise, surprise, this is of course also an impact on crypto prices. When money is flowing in, crypto prices tend to go up. And that is what we see with this chart at the bottom. This is the Bitcoin price. So when money comes into the market, Bitcoin goes up, and that is with a leverage effect. So Bitcoin appreciated by 260% since the beginning of October, while the stablecoin market cap went up by only 85%. Now still, there is a lot of volatility. What causes a price drop like this of 26% while there's actually money flowing into the system? The answer is swapping activity. So it's not just people depositing their money into the system and then wait and invest for the long term. Most people in crypto trade actively. And whenever people move from stablecoins to risk on assets like Bitcoin or altcoins, the prices go up and vice versa. So there's money flowing in and out, and there is swapping activity, people getting risk on and risk off. Now we can use that data because we can have a look at how much of the entire cryptocurrency market cap is currently in stablecoins. When most people have swapped into stablecoins, the stablecoin dominance, so the percent of all of crypto that's in stablecoins, that's pretty high. When a lot of people have deployed their stablecoins, then the stablecoin dominance is low and the crypto prices are high. So check this out. This is the stablecoin dominance, and this is much more volatile than the stablecoin market cap. And at the peak, 19% of all of cryptocurrency's market cap was just stablecoins. So that's when people are very much risk off. And that's then also when the Bitcoin price tends to be low. As stablecoins get deployed into risk on assets again, the Bitcoin price tends to go up. Now in the last 1.5 years, we tended to trade in a range. So that's between 9% stablecoin dominance to 5% stablecoin dominance. And if this is now coming back down again, as we have seen in the last few days, then crypto prices will go up. Let's work with the assumption that we see the exact same development of people deploying their stablecoins again as we saw in November of 2024. So let's overlay this. If we take this time frame and we look at the Bitcoin price development during that time, then we can overlay this to the price today. And we're getting to a potential upside of somewhere between $130,000 to maybe even $150,000 per BTC. And so this is, I think, the most likely scenario. I think most people have this backwards. There are too many comparisons made with traditional finance and the crypto ecosystem, as in when the money supply is going up or when the Federal Reserve is lowering interest rates, that's when money is loose and that's when crypto prices should go up. But I don't think the link is that strong. I think the link is much stronger for how much money is currently on the sidelines already within crypto. We know that the crypto ecosystem as a whole is expanding, right? The stablecoin market cap is going up, and that obviously matters. And at the same time, we also see that a lot of that stablecoin money is not yet deployed, but is ready to get deployed. And so if we work with that scenario, if we say, okay, a lot of that money might get deployed if times get a bit brighter, should we just go now and buy all kinds of random altcoins? I am not so sure, because here's the counter story to all of this. The Bitcoin dominance continues to go up. So as a fraction of all of crypto, Bitcoin becomes more and more important. Bitcoin tends to outperform most other assets. And we only saw an altcoin rally when Bitcoin dominance was close to 70%. So when only 30% of the cryptocurrency market cap was in the alts, that's when the alts were cheap enough to subsequently make a rally. And we are not yet there. So just building a portfolio of altcoins is probably not going to cut it just yet. Here is what I'm doing instead. I'm looking at what are other influencers and other heavyweights buying. So we track various important wallets and we see, for example, how the Memecoin team or the base AI team is accumulating the KEK token. And that's happening at a very small market cap, only 3.2 million. We got notifications for all of those purchases, and though the price just continues rising, we still need an edge in this market. We can't just buy any random altcoin, but the market is expanding. It does make sense to take some risk on bets now. Now, since crypto cannot create money out of thin air, it's still a player versus player game. And so if you follow the insiders, if you follow the people that traded well in the past, we have an edge. For example, over here, we've got 33 wallets that we track by the Crypto Banter group. They've got 1.16 million subscribers on YouTube. Or we are tracking 12 wallets by Alex Becker. He's got 1.6 million subscribers. Or check this out, Brian Young. We have 5 of his wallets and he's got 2 million subscribers. So there are two components to this. First, those influencers tend to get information relatively fast. They tend to beat the market. But secondly, they might also have an impact on the market. So when somebody with 2 million subscribers talks about a small cap cryptocurrency, of course, some of the followers will buy the token, which then pushes up the price. And so with all of those wallets that we are tracking, we get various signals. Who's buying and selling what at what point in time. And while it's nice that the market is expanding, it's still a winner takes most market. So returns are very much concentrated in just a few assets. There are mostly losers in this market and a few winners that take it all. Just have a look at the top 100 cryptocurrencies in the last year, right? There are some tokens that perform phenomenally and a lot of them that are just losing. So just diversifying does make sense. If we just build a portfolio of many different altcoins and we don't trade actively, then we are underperforming Bitcoin because Bitcoin dominance continues to rise. Instead, what we need to do is we need to find ways to buy things such as virtual very early. And this is where we come back to Brian Young. We got a signal of Brian Young buying into the virtual token, and that was at 7 cents. So that was on the 21st of March of last year. Our community got excited and bought in. And of course, the rest is history. Right now we are at $1.75. And so this is my strategy in this market. The market is expanding, people are making profit, but still returns are concentrated in a few winners. And we have to have a way to identify those winners. And we don't have to be the best at this, right? We just need to know who are the best and we have to find their wallets. And of course, this is not public information. And so we have to do on-chain analytics to find the wallets. And so of course there is the influencer trade channel with all of those signals, but there's also a tutorial course on how to find different wallets. So we use related trades, we use official NFT transactions, we try to figure out ways through deposit addresses on centralized exchanges, etc. to get new wallets that we then actively track with this automated bot in the channel. And since the community is learning how to find new wallets, we also have a dedicated wallet research channel. So this is then where our 500 members look for new signs for influencer wallets. And once the moderators have confirmed those wallets, they get added to our tracking. For example, here, right, we've got Crypto Gains that suddenly out of nowhere was talking about the Champ token. And of course, we knew about this because we saw the purchase alerts before in our tracking. And so by tracking the insider wallets, we become insiders as well. Not of course in the legal sense, because all the data on the blockchain is 100% official and transparent, but we do have an edge over other market participants because most people don't go through all of that effort. And so it's not necessarily just about buying one asset and finding the winner and holding it long term like virtual. It's also about shorter term trades. And so the community, of course, shares the winning trades as well over here. Just have a look. If you add some leverage to the game, you can make quite nice gains in a short period of time as well. So feel free to check it out. It's currently $125 per month. If your crypto portfolio is not just $500, but rather 5,000, then it's probably going to worth it for you, especially in this current market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.